Welcome to Upticks. I'm Jake Falcon, the founder of Falcon Wealth Advisors and your host for Upticks. Today is our 59th episode, Retirement Tax Planning. Okay, Matt, welcome back to the show.
Thank you. I'm excited to be here.
It's been a few weeks since you've been on, and I know you've been very busy writing blogs and doing research all around tax planning.
Yep.
And you actually just finished a series of blogs where you talked about relocating in retirement.
Yeah.
And I wanted to get some summaries of those blogs to share with our audience because I think you uncovered some pretty powerful things.
Yeah, so really I was inspired to write a little series of blogs, if you will, about relocating during retirement. And what kind of spurred that is something that we're always talking about in client meetings is we want our clients to retire to something. So we want them to look forward to doing things every day during retirement. Sometimes when our clients relocate, that opens doors to things that they want to retire to. So it's pretty exciting, but it's important to obviously make an educated decision when you're moving somewhere. And so one of the things I got into was the tax advantages or maybe disadvantages of certain states of moving into.
Yeah, and just with the winter fast approaching here in Kansas City, it makes good sense why maybe this is a good time if you're getting ready to retire or you are retired. I just met with a client yesterday and they're like, we are leaving Missouri very soon and going to Arizona because we are not spending winters in Missouri anymore. So we have clients that have relocated to Florida. We've got clients in Colorado. We've got clients like them. Again, they're going to go down to Arizona this winter. We've clients in Texas. So good. So this is very pertinent. So the first blog that you wrote about talked about property taxes.
Yes.
So why don't you kind of define what property taxes are and why does that matter to a retiree?
Sure. So property taxes, as most people know, are assessed on the value of the property that you own. So this is really applying to homeowners.
Okay.
And what the state does is they're going to evaluate what the property's worth, and then they're going to apply a tax that they deem typically annually.
Why do they do that?
They have to make money somehow.
Okay, fair enough.
They have to have revenue from some
So
sources.
for owning property, you have to pay the state taxes every year.
Correct.
Okay.
Yes.
So what did you uncover when you were looking at, did you look at different states or, okay.
Yeah, so I looked at each state essentially, and I looked at, well, what's most or what's most advantageous and what's not. What's something that's interesting is some states will actually offer a tax break to people once they reach a certain age in which they deem as a retiree or a senior, if you will, kind of tax break on your property taxes. So that's something that people can look into.
Interesting. Does Kansas and Missouri offer a tax break?
I don't believe so. However, there are different states who do, and those states sometimes will offer them in different ways. So sometimes it's pretty interesting. States will offer a dollar value, or sometimes states will offer a certain percentage of your property tax that is essentially tax sheltered. So the property taxes will not be owed on that portion of the property.
Interesting.
Yeah.
Do you remember, I know it's probably been a while since that was your first blog in the series. Do you remember which states maybe had the best advantages as far as with this? And what age did they typically constitute as retirement?
I believe 65 is the full retirement age there for that consideration. But it's depending on what you're looking for or really your property value. Because if you have a higher property value, some of them are going to offer percentages. And so obviously those percentages are going to go farther.
Gotcha. So it's case by case.
Exactly.
Makes good sense. So I guess a big takeaway from your first article in the series is that before moving or relocating, you want to look into the property tax code for the state that you're seeing and see if there is a discount for seniors or retirees. And certainly if it's more property taxes than you're paying where you currently live, that's okay also, but you just want to make sure that we at Falcon Wealth Advisors can help you figure that out and then reflect that increase or decrease in your financial plan accordingly.
Exactly. Yeah.
Okay. So I wouldn't have thought that. I wouldn't have thought property taxes would have been a consideration when relocating. I know a big one is income tax, and that was your second one that you talked about.
Yep.
Income tax is a big deal. I know Texas, for example, doesn't have any income tax. So why don't you kind of go into what that means for our audience as far as state income tax?
Sure. So income tax, as we all know, is charged on the income that we are taking in. And so certain states actually don't apply an income tax, just like Texas, like we talked about, or Florida is another great example. And what happens is when retirees typically are taking distributions from their IRAs, they're going to owe federal taxes and they're going to owe state taxes.
Which is typically what, around 5%? I mean, I know it varies state to state, but here in the Midwest, I feel like it's right around, plus or minus 5%.
Roughly, yeah. It's a roundish number there. So what happens is when you live in one of those states and you're taking a distribution from your IRA, you actually don't owe state taxes.
Wow.
So that's gonna make a big difference potentially on the principal over the course of the long term, right?
Absolutely. So if you're pulling $50,000 a year from your IRA or $100,000 a year from your IRA, that's automatically you're getting 5% on that money that you're not having to pay to the state that's staying invested or applied different places, whether that's higher property taxes or whatever that may be. But that's definitely a savings. So that is, and I wonder why these states offer that type of incentive. I wonder why there is no state income tax in Texas and Florida. And I think, isn't Nevada one of them too?
I believe so. But what's interesting is there's been studies that the GDP growth has been larger in some of these states that don't offer state, or that don't have state income tax, which is an interesting fact there. Now, it is important to note, and I do note this in all my other blogs, that just because they're not taking state income tax doesn't mean they're not going to be looking to some sort of revenue from somewhere. They have to pay for those certain things for their citizens. So maybe their property taxes are a little bit higher or other things, but it can make a pretty big consideration on when you're taking your IRA distribution and the principal and that growth over the course of time.
Right. So again, that shouldn't be the only reason you pick a state, but that's definitely another consideration that you want. And some states are really high. If you want to retire to Southern California, their state income tax is really high. And so you've got to just be careful. And again, that's where you come back to Falcon Wealth Advisors. Not only will we help you find what those are, we'll work very closely with your CPA, we'll also model it out in your financial plan and help you figure out if that's feasible or not, or what that's going to do.
Exactly. We can sit down and we can evaluate those different factors into your financial plan, which is exciting.
What about, so your third blog was about sales tax.
Yes.
So tell me what you found out about sales tax.
Yeah. So sales tax, there's 5 states that don't have sales tax. So that's going to make a little bit of an impact as well when you're making your everyday purchases, right? So when you're just living your life, obviously we know that when we make a purchase, we have to pay the sales tax on that purchase.
What are a couple of those states that don't have sales tax? Do you know off the top of your head?
I can't remember off the top of my head, and I don't want to quote anything wrong here.
So we'll flash it up on the screen. If you're watching this on YouTube, we'll put it up on the screen. But that's very interesting to me that there's states that don't have any sales tax.
Yeah.
So that's when you're buying goods, right? So if you're at the grocery store or Walmart or wherever, there's no state sales tax.
Yeah. And so do keep in mind, just like I said, though, they could be taking that revenue from other sources, such as higher property tax or higher income tax, potentially. So it's coming from somewhere. We're not getting out scotch-free here,
right.
But it is interesting. So
okay. And then the fourth one was on estate or inheritance tax?
Yeah, so this is something that is potentially a little bit morbid, right? But we do have to think about this, and it is something that we have to think about in the long term. However, there are certain states that have an estate tax and an inheritance tax. So at the federal level, there is an estate tax if your state is above a certain dollar value. And so what happens is the states also come in, and there's a handful of states. There's not all states do this. So it's something to keep in mind. If you're looking at it, you want to see if your state has an estate tax that's added on additionally. They'll have their own dollar value.
It could be different from the Fed.
Exactly.
Interesting.
Yes. So we want to look at that and evaluate, well, is your state going to be approaching that level as we look at your financial plan? And if it is, that's something that we need to look at. Are you willing to pay that estate tax down the road? Because that can make an impact on potentially the funds you're going to be able to give to your beneficiaries. So,
isn't that crazy that there's 50 states and all of them do it a little bit differently?
It is. Everyone's got their own system down, but we're one country here. It's crazy.
Yeah. I don't know. I don't know. I don't get that. Maybe that's a topic for another show. But so again, the point is, you can find these blogs out at falconwealthadvisors.com under our content section. Matt has a series there, and certainly on the drop down you can find them.
Yep.
Matt will go into the details of the states and some of the percentages and some examples. We will certainly flash up some of that on here as well. And you certainly can reach out to Matt, at matt@falconwealthadvisors.com if you want us to do a little deeper dive saying, hey, Matt, I've always wanted to retire to Utah. What does that look like? Well, we should look at property taxes, income tax, sales tax, and estate tax, right? So it's not a decision that you should just make quickly without doing your homework, is really the point of Matt's series. And just know that all of these states do things their own ways. And one way or the other, though, I think your overriding point is they're going to get your money, right? They're going to get some tax from you, but you just want to understand because maybe you're not going to buy a big property in whatever state you decide to live in. So even if they do have maybe a higher property tax, it's not going to impact you at all, right? And so those are the different things that you've got to juggle and weigh. And again, you bring all that information to us and Falcon Wealth Advisors, and we'll help you crunch the numbers.
Yeah.
So the idea is with our clients, they get to do the fun job. Jake, I want to retire to Hawaii. What's that going to look like, right? And that's what we're here for. And Matt will go do all the research. It's like, okay, well, what does a typical citizen of Hawaii pay for this, pay for that? What do their taxes look like? And then we will take that into the financial plan into consideration and then model that out for you before you make this decision.
Yeah. Exactly.
So it's just a lot to consider. But yeah, you've got to be careful with it. Different, things vary from state to state. And you just want to make sure you know what you're getting into before you move there. The whole idea with retirement, to us, it's supposed to be a very fun, a very liberating time. You certainly don't want to get surprised and saying, well, Jake, I didn't know that California, state tax was so high. Now I can't afford to live here. I've got to move back to Kansas or whatever.
Yeah.
So we just certainly don't want any of those surprises when you're dealing with something that's already out there. Another strategy, thank you, Matt. Did I miss anything? Did you want to add anything?
I think that about covers it, yeah.
Perfect. So we'll flash up some more of the data on the video here. And then obviously you can go out to falconwealthadvisors.com if you want to read Matt's series. That's where you're really going to find the details. I did want to bring up another strategy about lowering taxes, or about at least tax planning for retirement. I either heard this on a show or I read it somewhere lately, and I thought it was pretty interesting. I wanted to get your take on it. And it's basically using Roth IRAs as a barbell strategy. And the whole idea with Roth IRAs is that basically you put money in after tax and then it grows tax free. And you typically don't want to pull the money out till you're 59 and a half. Now there's some other nuances and rules that apply, but that's just the basic understanding of a Roth IRA.
Yep.
And so from what I heard on the show is that it made really good sense to me is that Roth IRAs generally should be used for younger people when they're early in their careers, because they're in a lower tax bracket, so they're saving money or paying lower taxes, putting it away with the whole idea that they're going to be in a higher bracket when they're 50 or 60 because they would have made more money and they have more money and so forth. So front loading this Roth IRA in the beginning really makes a lot of sense. Well, then as your income grows, eventually you'll income out and you won't actually be even eligible for a Roth IRA. And then certainly we don't want people putting money in Roth IRAs that have high income, even if they do qualify, because we wanted to put it in pre-tax in their 401k. So the other end of the barbell, so you can think of the front load here early in your career, don't do any Roth IRAs during the majority of your career. And then I really like this idea is that if you retire, maybe you're 60 years old and you retire and all of your money or most of your money is in your 401k pre-tax, well then you can start converting some of this money into a Roth IRA to lower your required minimum distribution when you're 70 and a half.
Yeah.
Big kicker with this is you do have to pay some taxes out of pocket typically, and a lot of people don't like doing that, but it is a strategy where a Roth IRA may be more applicable than versus doing it when you're 45 or 50 and you're making really high income. Then a Roth IRA doesn't normally make sense. So it's a barbell strategy, not necessarily, again, this isn't advice, But that's when probably Roth IRAs would you'd want to give the most consideration to in that instance. Now, I know you study taxes a lot. What are your thoughts on that?
I think it's interesting because if you take into consideration what the Roth IRA offers and that tax growth, the tax-free growth, it's pretty special. It's almost, I like to refer to it as just something that, all of my friends who are my age should be taking advantage of.
Right. Front end of the barbell.
And a lot of my friends who are asking me for retirement advice, I'm talking to them about that. So we're all at the front end of the barbell. But if you look at the other end where you are looking, when you're approaching 70 and a half, that can also offer some great benefits because you're not necessarily having to take out as high of a required minimum distribution. So it can be pretty beneficial depending on your tax bracket, of course, and what sort of tax bracket you're in at the moment.
Right.
But if the factors line up, yeah, definitely. I mean, if you are not having to give as much money to Uncle Sam as you can, as they are wanting to, right?
Right.
That's awesome. So.
Yeah, so definitely something, and again, this doesn't apply to everybody, but it's definitely something worth taking a look at. So we would suggest that if you're watching this show or listening to it in your 20s, give us a call. We can give you some ideas about the Roth IRA. And then if you're watching this show and you're retired and you're not 70 and a half, let's take a look at that Roth conversion, and we can crunch the numbers and help you figure out if that makes sense for you.
Yeah, definitely.
Perfect. Well, thank you, Matt. I know we've already done the lightning round with you. So on to our fun topic here. I'm curious, is there anything, any good shows or books that you're reading or any comments about any sports teams that you wanted to make?
That's a good question. Honestly, I'm just excited that the NFL is back as a whole. It's been great to just sit back and watch some NFL on Thursday nights and on Sundays. I'm a huge football fan.
Are you?
I am. I don't hold it against me, but I am a Broncos fan.
I know, that's crazy.
And my Broncos are not looking so hot.
They lost. Didn't they lose to Oakland?
They did, the first game, which was pretty disappointing.
That is disappointing.
Your Chiefs were looking great.
Chiefs are looking great.
Mahomes was slinging the ball. It was awesome.
I got Mahomes on my fantasy team, so I'm really excited about that. I've also got Butker, our kicker. So that was a good pick too, I think. And I also have that. I don't know if I'm going to start him or not. That running back, LaShawn McCoy. Believe it, I think I did make him a starter this week.
Did you?
Yeah. So I don't normally play fantasy football, but my wife's side of the family, they needed a fill-in, so so they asked me, and so it's something different to look at. But you're right; it's pretty amazing what the NFL has done with their franchise and how popular it is.
It really is.
I would argue that it's probably taken over baseball as far as popularity from what I can see. And so, it's a lot of fun to watch. I think, me, I typically only watch the Chiefs. Are you a guy that will you watch a random game because it's a good matchup?
See, I'm pretty big into fantasy football with my friends and things, and so I will watch a lot of different games.
You watch the Eagles play the Lions?
I just enjoy football, and I just enjoy watching it. And I love getting to know different stories about the different players and how the teams all are connecting. And so for me, I'm more of a fan for just football in general, I would say.
Interesting. So, and college football too?
Not as much college football. I'll watch a little bit, but the NFL is primarily
what
I'm into. Yeah.
Interesting, because when I grew up, college football was a lot more popular, believe it or not, than NFL for whatever reason. I remember, maybe it's because of where I grew up in West Texas, but for whatever reason, I felt that, and maybe even in college, we just enjoyed watching college football a lot more. But, I'm a big Husker fan, and they're not looking so good either. So I'm probably
It's early.
Yeah, I'm probably going to switch over to just watching NFL and start playing golf again on Saturdays before it gets too cold. But, so it's great to have football back here. It's crazy how the sports talk also, especially in Kansas City, they have a huge drought in between Chiefs season.
Yeah.
A friend of mine is a host on a radio show, or I became friends with him, and he tells me how basically because the Royals are so bad, they are just begging for things to talk about while they're anticipating football season.
Football news that's slowly leaking out and different things like that.
Right. Yeah, they're always grasping for everything. And now that we're in full swing, I'm sure those guys are busy, very busy every day talking about stuff. So good. So we'll see how those Broncos shake out. I don't think they're going to I don't think they're going to give the Chiefs a run for their money in the division, but we'll see. It's early.
It is early.
Who's their quarterback?
Joe Flacco.
How old is he? Is he 40?
He's not young, but he is a Super Bowl winning quarterback.
He
I
is a
will
Super
remind you.
He is a Super Bowl.
He's got a little bit more than Mahomes does. So far.
Oh, yeah, we'll see. We'll see about that. So, well, good. Well, thanks for sharing that. And as always, thanks everyone for listening and tuning in. Please, if you like our content, we'd love a 5-star rating on iTunes or certainly a thumbs up on our YouTube channel. Please subscribe to our content and feel free to share it to your friends and family. You can find us on all the social media platforms as well. So we're out there on Twitter, Instagram, Facebook, and LinkedIn. And again, if you want to reach me out there on Twitter, I just found out that, believe it or not, that I think it's something like 30 or 40% of people on Twitter are over the age of 45. I didn't know if you knew that. I just found that out this morning. So I bet a lot of our audience is out there on Twitter. And you can find me out there at Jake Falcon, CRPC. And then, Matt, I think you prefer email if you have any questions, right?
If you have questions about anything that we talked about today, I would be more than happy to talk to you about it. And the best way to reach me would just be my email is matt@falconwealthadvisors.com.
Perfect. Thanks again for tuning in, and we hope you all have a great week.